Those are the two very important determining factors over and above all the effort that management puts in to improve our results, which I think we've certainly seen in this past reporting period. But we've had the rand impacting us negatively, but that fortunately that's been compensated by the higher oil price and other prices. Very difficult to predict oil prices. There's obviously a spike because of the geopolitical situation in North Africa and the Middle East, but we would see it would stay in the late 80s, early $90 per barrel for the rest of the financial year. And the rand, the best guess we can have is around 7 at this point in time. It fluctuates quite a lot.
When it comes to that oil price, I mean, you've mentioned it's so hard to predict. It's been volatile. What's your hedging strategy at play on that current oil price? Because if prices stay as high as they are, they threaten global economic recovery. And if demand tapers, we might well see that oil price unwind sooner rather than later.
Yes, I think oil price will probably unwind a bit because I think some supply risk has been factored into that price given the geopolitical events at the moment. So this is not a bad time to hedge, and in line with our risk management policy around hedging, we are giving this consideration where we typically would hedge about 30% of our oil production. If we can get the right spread between the bottom and the top, and those are starting to look a lot more interesting in the last few days.
Well, let's take a look at factors that are more within your control. I mean, we've had investors really fretting about the mushrooming variable costs, which have to be kept tight because, revenue streams are so unpredictable. Last year we had that employee cost number causing quite a stir. Progress being made on cost containment. Are we seeing a significant enough reversal in expense trends?
Absolutely. I think our cost performance has been quite remarkable in the last year. We've managed to get this, despite a growing company, we've managed to bring our cash fixed costs down in real terms. And I think this is a significant feat, and as a result of all the very incisive management action we've been taking on operations, on business improvement plans, on rejigging the way we provide functional services to the group. So that's all yielding results, but there's a way to go. So I think there was a misunderstanding around labour cost. There was a wrong allocation. The absolute number indicated, even in last reporting period, a good cost performance.
So where we hear comments like Sasol's management is coming dangerously close to losing control of the super tanker, your response, nothing to worry about at this stage?
I would say that's an incorrect assessment entirely. Compare us with our peers on a cost or a volume basis, and I think we outperform the class.
We've got costs then incurred via fines imposed by the Competition Commission to consider the latest settlement, Sasol having agreed to pay a penalty of 111.6 million rand on Friday. Collusion, price fixing, it really seems to be an Achilles heel of the business. What measures are being taken to ensure better regulatory compliance moving forward?
We've had a number of issues that we've got through in the last couple of years. We came to a point where it was clear that because of the history of the company, there was in a couple of our businesses, and I must emphasize only really in 2 business units, there was secretive collusive behavior, which we deeply regret. It was unknown to us, and we took very dramatic action to correct that, including settling with the Competition Commissioner. The other matters that we've been involved in are much more of a technical nature, but of course those are also unacceptable. So we have over the last 2 years dramatically upgraded using international best practice and law firms from here and around the world to train and instill the knowledge so that we don't make these technical transgressions on contracts and things of that nature. So we're not through with all of this completely yet, but I think we can say the worst is behind us, and Sasol is a compliant company going forward without a doubt.
Well, we've got a very progressive dividend policy that possibly stands testament to that. I mean, run us through the rationale there, because for one, currencies remain volatile, and with that comes sensitive earnings.
Yes, indeed, but we have confidence enough in our own growth plans based on this wonderful technology we have, and I think the acquisition that we've recently made is testament to our ability to grow this company independent of the macro variables, to at least to some extent. So I think it's only fair, because we generate so much cash, that we return this to shareholders via a progressive, or in our opinion, a fairly generous dividend policy. We of course have caveats in that. Should the currency and macro effects become untenable, we would have to stand away from our progressive policy. But the way we see things, we can stick to it and maintain both a generous policy of returning to shareholders and growing the company.
Well, when it comes to that growth, we've got quite a few projects that are simultaneously at play. In focus is China right now. Of course, planning to set up that coal to liquids plant over on that end. The ball for now is in the Chinese government's court, but we had reports at the end of last year suggest that Sasol might be squeezed out of that project because government is reviewing a homegrown technology. Your assessment of how things are going to swing there? Of course, we've had environmental approval just come to the fore already.
Yes, I think it's positive that we've had the environmental approval on the Chinese project, but it is one of many factors that has to be approved. So I don't think we should get too excited by that. China is a big country, and this project, if we went ahead with it, would be the largest single project investment of any country in China. So this is quite something for a South African company. So of course it's taking time for the Chinese to make their decision. I think what also one should note that the Chinese used to be net exporters of coal, which is our feedstock. They are now net importers of coal. So there may be some, and maybe that's the reason things are taking a while for the decision, there might be some macro effects impacting the decision making of the Chinese at this time. So we really just have to wait and see.
In the meantime, I mean, you're certainly getting busy in other areas. Are you getting lots of inquiries from those countries that have perhaps got, you know, the resources that you talk of, gas and coal resources, but no oil? We've had comments about Uzbekistan, projects in India as well.
Yes, indeed. China, we would love to go ahead, but we have a lot of optionality. And we have, because of the success of our Oryx plant, GTL plant in the Middle East, we have now established a reputation where we can provide these countries with a monetization of gas solution and help their energy security needs. So yes, other than Uzbekistan, India, China, and now in Canada, which is the latest one that we're having a look at, we have numerous other countries and companies that are interested in this technology, which is great for us, great growth opportunities.
Some have questioned the silence on Africa. What's your African agenda?
Well, we continue to invest. We're the largest industrial investor in this country, so we see growing in this country as an important part of our strategy. We have a project in Nigeria using our technology in which we have a small interest, and there are other options, particularly in countries like Mozambique where we're very well established. We could well end up in time, if we find sufficient gas reserves, doing a GTL project in Mozambique. So, and there are others that we're looking at too.
Well, of course, that 23 billion rand capex will have to be spent somewhere. Looking forward, your outlook for the full year ahead?
If you can tell me what the oil price and the rand are going to do, I can give you the outlook. Operating wise, we're comfortable the company is operating well, so we should see good results from an operational point of view. But it's just too hard to make a prediction on what the macro effects will be, so we'll have to wait and see on that one.